In the vast and intricate landscape of human civilization, economic systems are not mere abstract constructs, but living, breathing organisms of extraordinary complexity. They pulse with the collective heartbeat of societies, responding to pressures, adapting to challenges, and sometimes undergoing radical transformations that redefine entire social structures. What we are about to explore is not a theoretical exercise, but a profound journey into the very mechanics of economic evolution, a narrative that traverses historical precedents, current global dynamics, and potential future scenarios of monetary reconstruction in the spectrum of monetary devaluation. Inflation is often misunderstood as a uniform, predictable phenomenon. In reality, it exists on a spectrum ranging from mild price adjustments to complete monetary disintegration. At the extreme end of this spectrum lies hyperinflation, a state of economic catastrophe that transcends traditional economic models. Characteristics of hyperinflation: exponential price increases, rapid erosion of monetary trust, fundamental behavioral shifts in economic interactions, breakdown of standard economic signaling mechanisms. Historical case study: Weimar Republic. The German hyperinflation of the early 1920s represents the quintessential example of monetary system collapse. During this period, prices doubled approximately every 15 hours. Workers were paid multiple times daily. People rushed to spend money immediately. Currency became less valuable than the paper it was printed on. Psychological dimensions of currency devaluation. Hyperinflation is more than an economic phenomenon, it's a profound psychological event. When a population collectively recognizes that their currency is losing value at an unprecedented rate, fundamental social behaviors transform. Immediate consumption impulse. People prioritize converting money into tangible assets. Savings become meaningless. Long-term financial planning collapses. Alternative exchange mechanisms. Barter systems reemerge. Foreign currencies become preferred. Precious metals gain critical importance. Historical trauma and economic memory. Germany's experience with hyperinflation during the Weimar Republic has created a unique national economic consciousness. This collective memory manifests in institutional skepticism towards monetary manipulation, strong preference for fiscal conservatism, deep-rooted understanding of currency vulnerability, faster recognition of potential inflationary risks, comparative economic psychology. While other nations might slowly recognize economic warning signs, Germany's historical experience enables more rapid and strategic responses. There is the emerging energy crisis landscape. Germany finds itself at a critical economic juncture characterized by energy dependency challenges, geopolitical disruptions in traditional energy supply chains, transition away from Russian energy resources, increased renewable energy investment with short-term economic strain, Eurozone structural vulnerabilities, centralized monetary policy, decentralized fiscal management, divergent economic performances across member states, potential hyperinflationary triggers, prolonged energy instability, continuing geopolitical tensions, structural monetary policy limitations. Part 2: Precious metals as economic stabilizers. Historical monetary role of precious metals. The gold to silver ratio of 15:1 is more than a historical curiosity, it represents a profound understanding of monetary value preservation. Why silver emerges as a critical asset, more accessible than gold. A lower price point for average investors. Dual utility, monetary and industrial. Historically proven store of value. Market dynamics of physical asset ownership. The post-2008 financial landscape has witnessed a significant transformation in investment strategies. Shift from paper to physical. Declining trust in synthetic financial instruments. Increased demand for tangible asset ownership. Growing skepticism towards futures markets. Manipulation of derivative markets. Paper market distortions. High-frequency trading algorithms. Synthetic asset creation. Regulatory arbitrage mechanisms. From silver standard to digital currencies. The progression of monetary systems reveals a fascinating narrative of human economic innovation. Pre-1873 commodity-based systems. Silver as primary monetary standard. Direct link between currency and physical assets. Gold standard era. Increased monetary standardization. Global trade facilitation. Limited monetary supply. Fiat currency regime. Decoupling of currency from physical assets. Increased monetary flexibility. Potential for systemic manipulation. Emerging digital currency paradigms. Blockchain technologies. Decentralized financial systems. Potential for radical monetary redesign. Part 3: Strategic preparation and leadership. Beyond individual survival, systemic reconstruction. The most critical role during economic collapse is not individual preservation, but systemic reconstruction. Leaders must accumulate real assets, diversify beyond traditional financial instruments, prioritize physical asset ownership, understand historical monetary transitions, build resilient economic networks, create alternative exchange mechanisms, develop localized economic ecosystems, maintain adaptable strategic frameworks, the opportunity within collapse. Economic transformation represents more than a potential catastrophe, it's an opportunity for radical reimagining of societal structures. Key strategic imperatives are maintain strategic flexibility, understand historical economic patterns, build robust, adaptable institutional frameworks, prioritize real asset accumulation. Economic systems are not immutable laws, but human constructs constantly evolving, always responsive to collective imagination and strategic intervention. Our exploration reveals a fundamental truth: within every economic challenge lies the potential for profound transformation.